Today I'm going to show you how to get 80K, even upwards of 100K for your business by following the steps that I took a residential builder through to get over 103K for his business and counting. And if you're familiar with the 524 rule, then you'll understand when I tell you that this client was at 1024 and he was still able to get an approval at that bank even though he should have gotten a denial. And hey, if you're looking for business and personal credit cards, either to build up your personal credit or to get money for your business, go ahead and check out a link that I have below, which will ask you a few questions and then show you a bunch of credit cards that actually match your credit profile. Again, check that link down below. Now let's talk about some of the important issues that went into his situation. One was he had already done a lot of applying for himself, trying to get some money for his business. Most of what he did was getting money on the personal side, which of course weighs down his personal credit score. But he was able to get one approval on the business side, but that came with also many denials as well. And he had also worked with a different funding company, but when he went with that company, he also saw denials as well. Now, one of the things that we did differently is we took him through the fund process, which is what we use over here when we help clients secure funding for their business. Now, as you can see, this is an acronym, and I'm going to show you everything that I took him through so you can know how this works to go and secure this money for yourself. So step one, the F is foundation and readiness. So with this is basically the foundation that we have to work with, which is a person's personal credit score and their personal credit profile, which is what is being used when you are applying for this type of business funding that we're going for. And we go for business credit cards because they basically don't require you to have 2 years in business like most lines of credit and loans will at pretty much all the banks. You don't have to have a set amount of money, usually $20,000 or more, coming in every month in order to be able to qualify for this, because the places that we go to, they don't require any documentation, and you can have a brand spanking new business and still get funded. But there are certain things on the personal credit profile that they look for because this is a personal guarantee. And if you haven't already learned this before, basically it's better to use the personal guarantee to just go ahead and get the money that you need for your business, leverage that good credit score that you've been working on so hard to keep it so good, actually benefit from it and get money faster versus trying to take the longer route in building up vendor accounts and then still needing to have proof of income for most of the options that are no PG. And that usually requires, $1 million in revenue or millions in revenue, if not more. So the foundation here with his profile, his average credit score was about 762. And of course, for best results, you always want to be above 750 or at least above 700 in some range around there. But the higher, the better, of course. And his highest credit limit, which is something that the banks also look at when they're considering things. And all of this is a layered process now. So you got to remember that it's not just about one in particular thing that's going to determine if you can get approved and get high limits. There are several different things that go into whether you're going to get approved and how much you're going to get approved for. So one of those things that they look at is the highest credit limit that you've obtained on a personal credit card. The highest limit that this client had was 20K at a major bank. And also, they look at the number of accounts that you have on your credit report. They ideally, for business credit, want you to have at least 10 accounts or better, So that is something that you definitely want to have. And of course, the more the better, because this shows a thicker credit profile. It shows that you have actually been using credit, and it just makes you look more reliable in their eyes. So this particular client had over 35 open accounts on his credit report. Now, another thing that they look at is, your oldest card or the average age of your credit, because length of credit history also shows that you've been, dealing with and managing credit for quite some time versus somebody that just got their first credit card and then their credit score jumped up, after 2 months, 3 months. They want to know that you've been dealing with credit for a while. And the oldest credit card that this person had was about 10 years old. Now, of course, there are other factors that they look at on your personal credit report, but these are some of the more major things that they look at that are important. So I wanted you to have an idea of what the foundation looks like. And this is something that we look at to see if a person is ready to go ahead and go, or to see if there may be some tweaks or some changes some things that we need to do in order to get this person ready in order to apply. Now, the step 2 that we're going to look at, the U, is underwriting optimization. During this stage, we're looking at things that the underwriters are going to be looking at when they're looking at your personal credit profile, when they're looking at your business and how it is structured and set up. There are a bunch of different things that they look at, and that's why I said it's a layered process in determining if you're going to get approved and how much you're going to get approved for. So in this step of things, after we see that you at least have the foundation right, and we saw that this client did, minus a few things that we're going to talk about in just a second, this is that step where we're making those changes that are going to be required in order to make sure that the client looks the best before going into underwriting. So this is where you want to make these tweaks that might be necessary. Now, with this particular client, he had almost 7K between 2 charge-offs, which we needed to get removed, and we were able to do that. They also had some inquiries, and we had to do inquiry removal. Of course, ideally, you don't want to have any more than 3 inquiries within the last 6 months. And through one of the process that we used, he was able to get his inquiries removed within 4 hours. So, of course, that's rather good. But you definitely want to make sure that you are dealing with those inquiries and making sure that they are being removed or taken off the best you can, because you don't want to go in the door with too many inquiries. Of course, that shows that you've been applying for a lot of credit. That lowers your chances of being able to get new credit, because if you have a bunch of inquiries and you don't have those accounts, of course, that means that other people did not approve you. Now, another thing that was important that we had to make sure to set up for this client was their NAICS code and their SIC code. Now, a lot of times you'll hear, somebody mention using consulting. For this particular client, we did not use the consulting NAICS code or SIC code. And we did that for specific reasons. And there are, other codes out there that you can use other than that consulting code. And I do have videos on the channel going into detail about the different codes that are out there and different options that you have that you could use. So make sure that you check out one of those videos on the channel. And if you're getting value from this video so far, make sure you give the video a thumbs up too, so YouTube can know to show this video to more people that are looking for this kind of information. But back to what we're looking at here for underwriting optimization. Another thing that we do, or that we have to do, is relationship establishing. So in this part of things, you're basically making sure that the relationships that different banks require are put into place. Every bank is not the same. Every bank can be different in what they want you to do. A lot of that you probably know as going and opening up a business bank account. That is the standard, easy way to go get a relationship started. And of course, putting some money in there. But different banks want different amounts of money. With some banks, you don't have to put that much money. So, some people might be putting more money in than they really need to get the job done. But of course, it doesn't hurt to put more into the business bank account. The more, the better, of course. But then there are also, some banks that want you to actually further your relationship. They want you to actually show that you're using the account in a certain way. And, some banks, they don't require that at all. You can go right in and just get approved or, apply. And it really pays to know which of those banks require an activity and which of those banks don't, so that you're not lingering around waiting and doing some extra stuff that you don't have to do to get the money that you need as quickly as possible for your business. Now, another part that will go in this section as well in step 2 would be, if you had high utilization, getting your utilization down to a certain point. Ideally, you want to be anywhere from 3 to 9% as far as utilization on your personal credit cards. So that's also some things that go into underwriting optimization to make sure that the client, or make sure that yourself, is ready to go before you actually go to apply. And of course, there are some other steps, but these are going to be some of the most important things that you can do in order to make sure that you are ready to go when it is time to apply. Now, step 3 is going to be the N, which is navigating through approvals. Now, with this, an important thing that you have to do is have a strategic, sequence that you go into the banks. With this particular client, these are some of the banks that we actually went to for him. And in total, you can see we got about 87,000 just between these banks. And these aren't all the banks that we went to for this particular client. But, when you're coming up with a sequence, there are a lot of things that go into deciding that. It can be which banks check which bureaus, what banks are available within your state, what banks, are national banks, regional banks that you have access to that you can actually apply and get credit from. All of those things are important in determining which banks are going to be the best banks for you to go to. Also, you have to look at, what banks you have relationships with already. And you don't want to always just go to a bank that you already have a relationship with if that bank is not a bank that is one of the ones that usually give out the higher amounts of money. So understanding which banks are the best banks to go to, and sometimes that can change because, as time passes, as things happen in the economy and politics, some banks might, start wanting to take less risk and might start giving out less money. So where you might have heard one bank was giving out a lot of money at one time, they might not be giving out a lot of money at this time. And, that's why I have to stay pretty much up to date on which banks are doing what. And when you are, helping clients go to these banks and secure funds, you're really getting to see firsthand which banks are the ones that are still giving out money like that, which ones have made changes and tightened up. So it's invaluable information. And again, like in the first bank here for this client, and this isn't the order that we went in, but with that first bank you see on the list there, again, minding you that this person had a 1024, and yet they were still able to get that 20K versus a denial, because really, anybody just going online and applying in the branch would have gotten that denial because of the 524. But because as a part of our sequence in going to the banks to get approvals, we use, certain connections that we have at different banks in order to help the clients out as well. It is possible to see different results than what you would see by just going online or doing it in a different way. But all of those things and a few other things in regards to how we navigate through the approval process, because you have to account for maybe somebody does get denied, no matter who you go with or if you do it on your own, you can see a denial. That is possible, but it's always about knowing what to do when you see a denial. Is it possible to get the denial overturned? Are there more banks that you can go to that can still help you reach your goal? All of those things go into being able to deal with if a person does come up with a denial. But luckily for this customer, we were able to go through the whole process so far with no denials. And that's more common than not. And our step 4 of the fund process, the D, is actually debt optimization and expansion. And as I just mentioned, that client, he had 87,000 from what you could see from the banks that we went to, not including the ones that weren't on the list, which got him, beyond the 103 and counting. But with this phase of things in this step, basically we're doing what we can do. And mind you, the whole 87,000, the 103,000 that he has so far is at 0% interest. But when we're doing debt optimization and expansion, we're doing everything that we can to get you beyond that 150,000, or to make sure that there's a plan in place to get you past 150,000 if you need to get more money. Also, a part of what goes into that is expanding the 0% interest periods, because with the business credit cards, you're able to get that 0% interest because they give it to you for, usually a year on average, sometimes a little bit more, sometimes a little bit less. But usually it's going to be about a year. So being able to expand those 0% interest periods is something that's very important. And that's something that we help prep the clients for, while getting more money for the business than what would usually be limited to the 100 to 150 range. You want to be able to get that at another, period of 0% interest, right? And then, of course, making sure that they have been game planning and planting the seeds that are necessary for longer term opportunities, where, there are some banks that actually benefit you more to wait more time to get some funding and building the relationship. We provide guidance on that just to make sure that they aren't just stuck where they're at now, so that they still have opportunities and know what to do going forward to get more money at 0% and still be able to benefit and accommodate their business as it's growing with these additional funds that it's getting that it didn't have before to grow. Now, if you want help getting funding for your business, go down to the links below and book a business funding strategy session with me so I can see what's going on with your situation, where you are, and how we can help you secure some money for your business. And if you want to see how we helped another client get 75K on one card, go ahead and check out this video right here. And if your credit isn't where it needs to be right now in order to start seeking out funding in this way, go ahead and check out this video to learn how you can get your score up 150 points in the next 30 days. And I'll see you in the next one.